gonna give you all of the secrets on the fastest way to increase your credit score. The number one question that people always ask me is, Mike, what can I do to increase my credit score the fastest? I want to raise my credit score. So in today's episode, I'm going to cover all of that. I'm going to give you all of the sauce for 100% free. So on today's episode, we're going to focus on the most powerful and most effective way to increase your credit score in 7 days. That's right. I said it 7 days. This is not clickbait. You're going to be shocked because it's really not that difficult, but a lot of these people out there are not teaching you exactly how to take control of your credit score. It's one of the biggest things that I taught all of my credit repair clients when I offered full service credit repair. I literally taught them exactly the recipe on how to take control of their credit score, because a lot of people think that it's the credit card companies, the loan companies, the banks, the credit bureaus that are controlling your credit score. And in fact, it's not. It's you that actually controls everything about your credit score. But nobody's unfortunately broke it down to you until now. You want to make sure that you watch this to the end, because I'm also going to give you the number one credit score killer that nobody ever talks about, and all the tips and tricks along the way that you need to learn so you can continuously watch your credit score grow. Before we get into this major topic, I want to give you one huge tip that I see as one of the biggest problems that nobody ever talks about. A lot of credit repair companies out there are going to tell you, yeah, man, fix your credit. We can help you get your credit score up. When in fact, if you are carrying credit card debt, do not pay for credit repair, because all these amateur bootleg credit repair companies are just focused on getting you on a monthly subscription. What you need to focus on is paying off your debt. So instead of paying for credit repair, take that money and put it towards your actual credit card debt, paying down your credit cards. And that's going to be the first thing that's going to help you increase your credit score. And you're going to be shocked when you're like, oh my God, I could have done it all on my own right here. And then you can actually put your energy and your money towards credit repair, attacking negative items like collections and charge-offs and all the other negative juju that's hurting your credit score. So remember, don't fall for the credit repair trap if you have credit card debt. Pay off your credit cards first, and now you're mentally ready and you're monetarily ready to pay for your credit repair and be focused on getting deletions and helping increase that credit score even more. Sorry, I just had to get that out of the way because I feel like nobody ever talks about it. In order to fully take control of your credit score and watch it grow and watch that credit score increase over time, you need to understand the basics of credit. So I want to take it back to the basics and really break down the 5 factors of credit that are going to help you take control of your credit score. This is what everyone is missing. They really don't talk to you about all of the 5 factors of credit and how they affect your credit score, because they just expect you to know all of it since you've been watching all these videos, but unfortunately nobody's talking about it. So it's really truly important that I break down those 5 factors so you can fully understand how they're going to affect your credit score, and you can truly watch your credit score grow and watch it increase slowly as you're doing all of the right things possible to make sure that you get to that 850 credit score. Now remember, there are 3 categories that are going to be the most important that you can always focus on, but there are a total of 5 categories. But these 3 are key to your success, and understanding if you can master these 3, everything else will fall in line for you. Now, what a lot of these amateurs on social media are not telling you is every single category that's made up of your credit score is going to get you a certain amount of allotted points per category. So we want to squeeze every point that we can out of those categories to get the maximum and highest points possible. Now, what a lot of these amateurs on social media don't tell you is every single category on the 5 factors of credit gets you a specific allotted amount of FICO points. Now remember, we're talking about FICO. We're not talking about the bootleg Credit Karma score. We're talking about FICO points. Now, the first category that's very impactful is payment history. Payment history is going to get you 192.5 points if you make sure to never ever get a late payment ever. I cannot stress it enough to you. Late payments are an absolute nightmare. Don't get any. Now, credit utilization, otherwise known as the balances that are reporting on your credit cards and only your credit cards, can get you a maximum of 165 points. Always keeping your utilization below 9%. That's always going to keep you in the safe zone. Now, credit age is going to get you 82.5 points. Credit mix is going to get you 55 points. And inquiries, or otherwise known as new credit, is going to get you 55 points for a total of 550 points that you can control. You automatically get 300 points. So remember, remember, you automatically get 300 points just for playing the game of credit in life. So make sure that you screenshot this chart, send it to your friends and your family so everyone can see it and everyone knows exactly how to control their credit score. Now pay attention to those top two categories. Payment history is going to make up 35% of your credit score, and then credit utilization is going to make up 30% of your credit score. So if we can control both of those categories, we are essentially controlling 65% of our credit score, and this is where you can make the most impact ever. So let's focus on controlling those first two categories, because those are going to be the most impactful every single time that you attack them and you're doing all the right things. And like I said earlier, never ever get a late payment, because a late payment can hurt your credit score all the way up to 7 years. Now it has the most impact in the first 48 months. That's 4 years. And then it starts to taper off and it loses more of its weight around year 6, and really about 5 and 5.5. But year 6, it really starts to lose more weight, but it's still affecting your credit. And lenders do not want to see any late payments in the most recent 24 months. And some don't want to see them all the way up to 48 months. I heard some amateur on social media telling people, oh man, a late payment doesn't hurt your credit score but for 30 days. No, it does not. It hurts your credit score for a really long time, a maximum of 7 years. Remember that. But if you did get a late payment, you want to focus on reversing that late payment or deleting the late payment. Never ever focus on trying to delete the entire account, because I've heard some other idiots on social media say, oh, just delete the whole account. Could you imagine you have 2 late payments affecting a credit card account or some type of account that's been open for 5 years, and you delete the entire account that has 5 years of history? You're going to do way more damage by trying to delete that entire account. So don't do that. And when you're taking control of your credit score, manipulating those two categories, payment history and credit utilization, you can easily do it, but you need to understand how to read a credit card statement. So I'm going to put up a statement from Capital One. Now remember, they're all basically the same, but we're going to break it down as easy as we possibly can so you can understand how to pay your credit card properly, so you can squeeze out every single point out of your credit utilization and your payment history. Because remember, all we got to do is pay on time, and then we got to keep our utilization as low as possible. Now we're going to put this credit card statement up on the screen so you can see it. Now the circled little box is the due date. You always have to make a payment if you're carrying a balance by your due date. Now you can set it for auto payment to at least make the minimum payment so you never miss a payment. That is very, very important. A lot of people are like, okay, so do I pay on this date or this date? No, you always have to make sure that you make a minimum payment at minimum if you have a due date and you have an actual balance on your credit card. So just remember that. But the true sauce lies in your statement closing date, that little square block that you see right there. You see how it says January 22nd, 2023? That second date is what we call our ending date or closing date. That's what we need to focus on. You see how there's a big gap? You go from the 16th to the 22nd. That's why there's that big gap, because that's when they're going to try to calculate all of your balances so they can hit you with those interest fees. And we don't pay interest fees on this channel, just in case you're wondering. We want to learn how to pay off our credit card properly so we can squeeze out all of those points. So we want to make sure that we set some type of payment, or at least we set an alert on our phone to let us know, okay, my statement closing date is on the 22nd, so I want to pay it 2 days before the 22nd. So let's say hypothetically on the 20th, we're going to pay off the credit card in full. And then we're going to stop using the credit card for up to 7 days, because the credit card company has 3 to 7 days to report your balance. And the number one mistake that people make, it's a trap. Trust me, it's a trap. What they do is they go use the credit card right after they paid off the balance, because they're like, oh, it already posted. No, it didn't post yet. It's very rare if a credit card posts on that same exact date when it closes. A lot of people love to argue with me on this on social media, but I'm telling you right now, it's 3 to 7 days at maximum. So I say just make yourself a 7-day window that you don't touch that credit card. And if you're confused and you're a little lost, you're like, but why are we giving it 2 days before we pay it? Because remember, a payment usually takes 1 to 2 business days for it to clear. So if we pay it off in 2 days on the 20th, and then once the 22nd hits, then we stop using the credit card, we wait another 7 days, and then now it is reported that new zero balance or lower balance because you've paid down your credit cards. Now pay attention to this that I find very interesting. Notice how they make the minimum payment due very, very big, but they don't really highlight your statement closing date, because they want you to focus on that minimum payment due, because it's a trap to get you to continue to pay interest fees, because this is exactly how the banks make money. But again, don't fall for that trap of just making the minimum payment, because you're going to continue to pay on that item for the rest of the eternity of life. A $200 balance can turn into a $500 balance because interest rates are absolutely high right now. Now, if you see my statement right there, it says I'm negative $8.52 because apparently I paid too much. So now I'm in the actual positive. It says negative, but it means I actually paid too much, because sometimes I'm like, you know what, just pay it or whatever. It'll be on there because I'm going to use the card anyways. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using Dispute Beast, the most advanced AI credit repair software ever created. But specifically, I want to give a shout out to Matthew. Matthew's credit score went up 285 points after one round with Dispute Beast. And Maurice's credit score went up 237 points after one round with Dispute Beast also. But let's not forget Shakia. Shakia's credit score went up 215 points after just one round with Dispute Beast also. Now, Dispute Beast link is going to be in the video description and pinned at the top of the comments for anyone that needs to fix their credit. Last part's the most important. Now, one of the biggest things that I see that confuses people a lot is they say, well, I paid off my credit card. Why is it reporting a balance? This makes no sense. It's reporting a balance because you paid it by your statement closing date, but then you used it in that 3 to 7 day window and it captured that actual transaction. And guess what? Now they're going to charge you interest fee. A lot of companies are very sneaky in how they leave that due date pretty close to your actual statement closing date. So you'll pay it off by the due date and you're like, oh, I don't owe anything else, I'm done. And then there's that big window, and then you use it in a 7 day gap also, and now you're being charged interest. It's really tricky, but just remember, stick to your statement closing date, make sure you make the minimum payment, and you're gonna be just fine. Give yourself a pat on your back because you just learned how to truly control your credit score. That's right, it's really just that simple. This one factor right here takes control of everything. And remember how I said you can increase your credit score in 7 days? This is exactly how you do it, by understanding how to pay your credit card. But there's another tricky thing that a lot of people are really misleading you with on social media. They're telling you, oh man, you gotta carry balance. If you don't carry balance, then it's gonna show that you're not using your credit card and the credit card company doesn't wanna see that. That's 100% wrong. Because remember, there are only 5 categories that make up your credit score: payment history, credit utilization, which is the balances owed, credit age, credit mix, inquiries. None of them say credit card activity. So what are they talking about? That makes no damn sense. It doesn't matter. But let me bring you this little trusty chart that I got from FICO. I'm one of the only creators out there that has this chart. So if you see anybody else posting up there, they got it from me. FICO doesn't actually let anybody have it now. I feel like I was the only one that actually was smart enough to save it and download it. But this chart is directly from FICO, the only credit score that matters, that is used by more than 90% of lenders. Now let's put this actual chart up on the screen so you can see it. Pay attention to the little rectangular block here. Now you can see right there, 0 utilization is going to get you a maximum of 55 points per the category of utilization or outstanding debt. I love how it says that there. You see what I'm saying? It says outstanding debt. It doesn't say activity of credit card like these idiots are talking about. Now, if you carry 1 to 6% utilization, you're going to get 65 points. If you carry 7 to 19% utilization, you're gonna get 50 points. If you carry 20 to 49% utilization, you're gonna get 45 points. Do you see the trend here? The higher the balances that you carry, the more points you're gonna lose. So all those idiots on social media say, you know, it's okay for you to carry up to 30% utilization. That's gonna get you the most optimal credit score. They're wrong. Now, before you come into the comments and you say, but Mike, that's a 10-point difference, you're right. But you see the little asterisk right next to it? It says, box number represents the maximum points possible minus the actual points you received already. So you may have already gotten the full 10 points. You may have gotten 3, 5, 6, 8. Everyone is different. You could have only got 1. So you may have already got all those points, and you can't get any more extra points when you get to the category of 1 to 6% utilization. For a FICO score, we're not talking about Credit Karma because Credit Karma is not a FICO score. This is the only credit score that matters right here. So you have to ask yourself, is it really worth it for me to carry 1 to 6% utilization to pay interest to squeeze out potentially 10 extra points? No, it's not. Stay focused. And I'm gonna tell you right now, a bank is always going to love anyone that's not carrying a balance. You think that they're gonna give me extra money when I'm carrying 6 to 10% utilization versus you who carries no utilization and carries no balance. They're gonna give you the money every time. And they're gonna look at me and say, we'll give them a little bit of something, or they may just completely deny me. Because remember, credit is all about risk. We need to reduce our risk as much as we possibly can to look more appealing for all of the lenders. Zero balance clearly shows us that that's the least risk out there. 1 to 6%, there's risk. It's pretty simple. Now let's put this other little fact checker up on the screen, and this is again directly from FICO, as you can see the little logo right there. Now you can see right there it says, having a 30% utilization ratio on your credit cards results in optimal FICO score points. False. This is directly from them. I'm not saying it, I'm telling you right there. They're telling you. Man, if you would have just seen the audience now, these are supposed to be credit professionals. They were trying to argue with the FICO people. I'm like, bro, you're talking to the FICO director and you're trying to convince her that not carrying a balance is bad? Like, really? Just stop talk. Just please stop talk. I just sat in the back of the room like, man, these people they really just don't get it. They so believe their lies. It's amazing. But now let's go down to the very bottom where you can see right there, paying down credit card balances has a positive impact on your FICO score. Sorry. So remember, paying down your credit card balances has a positive impact on your FICO score. True. Now again, give yourself a pat on the back, give yourself a round of applause, because I just truly taught you how to control your credit score. You really understand now what affects it instead of believing all this nonsense that you hear on social media, because it's really important to focus on those two categories, payment history and utilization. That's going to control our credit score. Now, moving on to something else that can impact your credit score. This is also one of the biggest questions that people ask me is, Mike, what do you think about trade lines? So for those of you who don't understand what trade lines are, they are authorized user accounts. So for every credit card that we have out there, you can add somebody as an authorized user. This is one of my oldest Capital One credit cards, and so I had to like black out the actual card numbers there, but you can add somebody on as an authorized user to your credit card, and you're going to get the payment history, you're going to get the credit limit, and you're going to get the age from the moment it actually opened. So if this credit card has been open for more than 5 years and I add you on as an authorized user, you're going to immediately get all of the payment history injected into your credit reports, which is going to be tremendous for any credit file that doesn't have 5 years of credit history. But even if you do, guess what? We just instantaneously injected all of that payment history, which again makes up how much of your credit score? Do you remember? That's right, 35% of your credit score. So when you add somebody on as an authorized user, this is why it's high impact, because you're impacting that category. And then also, if let's say hypothetically, the credit card that you're added onto has a high limit. If it has a high limit, then that's going to lower your utilization also, taking care of both of those categories, which is 65% of your credit score. So a trade line, or otherwise known as an actual authorized user account, can have high impact on your credit profile if you are actually one of those people that uses one. A great example, my son and my nephew. My son has over a 765 credit score, and so does my nephew, because I added him on to one credit card that has over 8 years of payment history and has a decent credit limit. But understand something, that doesn't mean it's going to automatically get you approved, because now banks are paying attention to people that have too many trade lines on your credit reports. You should only have at a maximum of 2 to maybe 3 trade lines on your credit reports. Really, honestly, only one is really needed. Now on to one of the other biggest questions. People always ask me, okay, Mike, I'm in credit repair. This is the number one mistake that people make. I'm in credit repair. Should I go ahead and pay for some trade lines, add them to my credit profile? No, stop. Work on your credit, on your actual credit reports first. So fix your credit first and then add the trade lines last, literally last. Now people say, why not add them now? Well, because it can be a temporary thing. If you're paying for it, which there's companies out there that do that, but I never suggest doing that because you have to actually know them and trust them. But if you do that, understand it's a temporary thing for 60, maybe 90, maybe 120 days, maybe 30 days. They're all gonna vary from company to company, and you're gonna have to pay them for that. And once you actually stop paying them and they remove you, guess what? You lose that history from your credit reports. So remember, always do this only with someone that you trust. And if you are going to do it with somebody, understand that it doesn't mean that it's going to 100% report accurately. It can go wrong. And it's not necessarily the person's fault or they're trying to scam you. Sometimes some authorized user accounts or trade lines don't report properly. It's just how it works sometimes. It usually happens when the person has been adding too many authorized users to their credit card account and the credit card company's catching on. They're like, nah, bro, we ain't playing that game no more. But remember, be aware, there are a lot of banks and a lot of lenders out there that are paying attention to authorized user accounts, and they don't like to see them on credit reports, because if you have too many, it can be a red flag to tell them that, well, this is actually not their real credit score. They're not a real trusted actual borrower, and they have ways in their systems, in their algorithms, to remove those authorized users to see what your credit score truly looks like. Yeah, that's crazy. They're getting better and better at this because they're not dumb. The credit reporting agencies are working with the banks because guess what? The more they can keep you down, the more money they can make off of you as a subprime borrower. Always remember that. They're not your homies, they're not your friends. If you enjoyed this video, we covered another big one on how to increase your credit score in 7 days. Now make sure that you watch this next video because it is about a credit union that you may want to learn more about. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.